All right, let's talk about Bitcoin. It's been on this absolutely incredible run, right? But now, well, it's hit a wall. And that's leaving everyone asking one single massive question. What is going on? So let's dive in and try to unpack the mystery behind its latest price drop. And this is the number that has the entire market buzzing. Bitcoin just slipped below $60,000. Now, that is a huge psychological line in the sand, and seeing it break has really put the whole crypto market on edge. It's a significant drop, and you can bet traders are holding their breath. So what gives? Is this just a temporary blip, a healthy correction? Or are there deeper, more powerful forces at work here? To figure that out, we've got to start by looking right inside the crypto market itself. Okay, let's get into our first section, inside the crypto market, looking at the ripple effect. Because when a giant asset like Bitcoin makes a big move, it sends waves across the entire ecosystem. The first clues are always found in the chain reaction that's happening on the exchanges as we speak. And wow, here's the immediate consequence. In just the last 24 hours, a staggering $224 million in long positions got liquidated. That's a huge amount of capital, completely wiped out for traders who were betting the price would go up. So you might be hearing that word liquidation and wondering what it really means. It's not just selling at a loss. It's way more brutal. Imagine a trader borrows money to make a much bigger bet. That's called using leverage. Well, if the market moves against them super fast, the exchange steps in and forcibly closes their position to cover the loan. In that moment, their initial investment is just gone. And listen, this isn't just a Bitcoin story, not at all. The pain is being felt all over the place. Ether is down over 3%, and other major tokens, Solana, XRP, Cardano, they're down anywhere from 3 to 5%. It's a real market-wide bleed. So this brings us to a really crucial question. When you see the whole crypto market moving down together pretty much in lockstep like this, you have to ask yourself, are the reasons purely internal to crypto, or is there something much, much bigger at play? And to truly understand what's happening, we have to zoom out, way out. The crypto market, it doesn't exist in a vacuum. It's being influenced by this global macroeconomic landscape that's putting a ton of pressure on all so-called risk assets. Right now, it really feels like investors are navigating a perfect storm of uncertainty. I mean, this week alone, you've got the Federal Reserve's interest rate decision, the very real risk of a U.S. government shutdown, major earnings reports from big tech, and potential currency intervention over in Japan. That is a lot for any market to try and digest. And just look at the political risk. Prediction markets like Polymarket are pricing in a 76% chance of a U.S. government shutdown this month. That kind of instability creates broad uncertainty, it tightens up market liquidity, and it makes investors super nervous about holding onto volatile assets, like Bitcoin. And while almost everybody expects the Fed to keep interest rates steady, that's not the main event. What the market is really hanging on are the words of Fed Chairman Jerome Powell during his press conference. Any hint, any subtle clue about future policy could send shockwaves through Bitcoin and literally every other asset class. This brings us to a critical point. Bitcoin is increasingly trading like a high-growth tech stock. Its fate this week might be tied less to its own market dynamics and more to the earnings results from those magnificent 7 tech giants. So if they do well, Bitcoin could rally. If they disappoint, Bitcoin could fall even further. To really understand how Bitcoin is behaving like a risk asset, the clearest comparison we can make is with gold. And right now, their paths are diverging in a really big way. I mean, just look at this comparison. While Bitcoin is struggling around $60,000, gold just surged past $2,300 an ounce. While some long-term Bitcoin holders are selling, central banks are buying up gold. The story here is crystal clear. In this moment of uncertainty, the market sees Bitcoin as a risk-on asset, while gold is playing its traditional role as a safe haven. And experts are actually calling this a widening macro-crypto split. The same factors that are driving investors to gold, things like geopolitical risk and a weaker dollar, are the very same factors making them hesitant to hold a volatile asset like Bitcoin right now. So, with all these different forces at play, what happens next? Well, here are the key events that traders are going to be glued to in the coming days. Here's your checklist for the week. First up, the Fed's commentary. Second, those earnings calls from companies like Apple and Microsoft. Third, any news on the U.S. spending bill and that potential shutdown. And finally, keep an eye on what happens with the Japanese yen.
Any one of these could be the next major catalyst for Bitcoin's price.
And that brings us to our final big thoughts. We started by asking what's driving the dip, but maybe the bigger question is what this dip tells us about Bitcoin's evolving identity. In a world full of macro uncertainty, is Bitcoin failing its test as digital gold, only to prove itself as something else entirely, the ultimate tech-driven risk-on asset? That's the billion-dollar question to think about.